Hi, everyone. My name is Juliana, and I am the producer for the accounting and finance shows in North America. I'd like to welcome you to today's webinar, Support for Small Business in the Era of COVID-19, ready for round two. We're just going to wait another minute and let the room fill a bit more. All right, awesome. The room seems to be filling up. We have 160 live listeners right now, so we'll go ahead and get started. So I'd like to say welcome, and for some, welcome back. Today's event, Support for Small Business in the Era of COVID-19, ready for round two, is presented by the Accounting and Finance shows. This is our second webinar in a series of webinars we will produce for finance professionals and business owners. Today, we have brought together a panel of experts that will help navigate the federal small business stimulus aid programs that have become available, again, under the new bill. So without further ado, I'd like to introduce our moderator, Ramona Cedino. Ramona Cedino is the founder and CEO of FiBrick Financial Services, an accounting and fractional CFO services firm. Through the many services and workshops her firm provides, Ramona enjoys and takes pride in her ability to bring people together and financially empower women to build sustainable businesses. She is a mentor of the We NYC initiative, where she leads mentor sessions and workshops aimed at helping women start and grow their businesses. I know she's been working tirelessly to help her clients navigate the CARES Act and support them through this pandemic. Therefore, we are very grateful to her and all of our panelists for taking their time to be here again today. Ramona, I'm going to turn it over to you now.
Thank you, Juliana, and thank you for organizing this event. The first one was amazing. I think the feedback was really good from the audience. I got a lot of emails, some of which I shared with you, and messages through LinkedIn. So I hope this one is going to be as successful and useful to the audience. We'll take some questions throughout, but we got a ton last time, so we might not get to every question. We'll do our best. I am so excited to be here for another reason. Just, of course, it's a great event, I know, but this means that we got approval for a second round of funds, right? So if that didn't happen, we wouldn't be here. So looking forward to sharing information with everyone, asking the panelists questions. And before we get to our panelists, I actually want to do the poll. I don't know if we can do that first. Are we able to, Juliana?
Yep, I can start the poll now.
No, hold on, Juliana. Let me see. I think I'm having a little bit of a great. No, let's go with whichever way you prefer. I couldn't see the slides. Thank you.
All right, I'm gonna start the poll now.
Good, great. So we want to poll the audience. We want to hear from you and see how you're doing. And this is the best way we can do it now, since we have a lot of attendees. So we have a question for everyone. Which program do you apply for? We have a few selections here, a few options. So go ahead and respond. We'll give you like 30 seconds, and then we'll be able to see the results in a few seconds. So go ahead and select multiple. I believe you can select multiple, yes. Great, thank you. Okay, wow, 75% apply to the PPP loan. That is awesome, and happy to see that you are here, although you already applied. Great. 43% apply to the EIDL, and the advanced 30% only. Great, thank you. Thank you very much for responding. These are very good numbers. the first one especially. Now we do have another question for you. We want to get to know you. We also want to know the status of your application. So a lot of you already applied. So we want to hear if your application has been accepted, what round is it in, if it hasn't been accepted yet, whether you have not applied. Go ahead and please give us your answers. Hopefully we have a good numbers of accepted from those, the 75% that apply to the PPP. Just like 20 more seconds, 15, 10. Awesome. Okay, great. So 32% had applications that have been accepted. 27 are in round 2, 18% round, sorry, 27% in round 1, 18% in round 2. Pre-application only 5% and not applying 17%. Very good. Thank you. And the last question is going to be coming up. What type of tax structure do you own? Do you have for your entity? Is it you have some options here: C or S corp, partnership, single member LLC, or independent contractor or sole proprietorship? I'm hoping the audience is enjoying these polls too. You can see what how you compare to the rest of the listeners. So. I wish I had a little clock that says 5 more seconds left. Awesome. Okay, very good. So those of you who have C Corps and S Corps, you hopefully have payroll records that you could show to for your application of the PPP. Those that have partnerships, single member LLCs. Also, you have WAIS and the independent contractors. Everyone, I believe, guidelines to apply, but it's good to see that the majority is in S and C Corp status. Great, thank you so much, and thank you to the Terrapinn team for creating these polls. We now want to move on to our panelists. I'd like to introduce everyone. So thank you for being here. I know you are so super busy, so we really appreciate the time. And we want to start, I'll start introducing each one of them. I'll start with Peter.
Hi, Peter Fennell with the United States Small Business Administration.
Oh. Peter, I'll introduce you. Don't. Okay. But thank you. thank you. I was just waiting for your slide. Thank you very much. That's right. Great. So Peter, thank you for being here again, of course, and for taking the time. You're here during the first round, and we really appreciate that. We're looking forward to the information that you have to share with the audience, and of course, we will get to it in a second. So Peter Fennell is a supervisory and economic development specialist at the SBA, U.S. Small Business Services Administration, Small Business Administration. He brings over 20 years of leadership experience in the public and private sectors, in his role leading the New York District Economic Development Team. He served at the Long Island as the Long Island branch member for the SBA, for the SBA's New York District Office before joining the Economic Development Team. He also, before joining the federal, the federal government, Mr. Fennell was president of the small business where he grew the company revenue by 5 times. Prior to Prior to that, he served in the United States Army as a military intelligence officer, working on intelligence projects for the National Command Authority. Mr. Fennell has also lived overseas in the Republic of Panama, the United Kingdom, Germany, and Turkey, and has a master's in business administration in international businesses and a minor in economics and history. Thank you, Peter. Thank you so much for being here again. Next, I will introduce Michael and Viola. Great. So Michael Angiola is a partner at PKF O'Connor Davis with more than 15 years of accounting, auditing, and business advisory experience on the executive level. As an engagement partner, he serves clients in a variety of industries, including construction, nonprofit, and governmental entities. He's skilled in generally accepted accounting principles known as GAAP and managerial practices and procedures. Mike plans and executes client engagements, including financial analysis and reporting, auditing, internal controls, budgeting, and strategic planning. He approaches each assignment with the goal of maximizing efficiencies. Mike has performed audits for public sector entities, including various state authorities and New Jersey school boards. He also conducted forensic audits and developed risk-based audit strategies. Thank you for being here, Mike. Next, I'm going to introduce Seth Nelson. And thank you, Seth. You were in with us the first time, but we're looking forward to everything that you have to share. Very exciting what you bring today. So now, Seth Nelson is the manager and partner of strategy and operations at Fundera. He has been in the social impact and fintech space for the last 7 years. At Fundera, he has led the growth of the company's small business administration, SBA, and bank lending platforms, including the SBA 7A and conventional bank loan products. Most recently, he has led the development of Fundera's SBA Economic Injury Disaster Loan and Paycheck Protection Program offerings. Before this, Seth was a management consultant at Maricon, focused on strategy and execution design for large financial institutions in payments, retirement income, and online brokerage, looking to disrupt their business models to better serve customer needs. Prior to this, Seth co-founded a social enterprise community honor fund, a nonprofit lender focused on relationship-based credit as an alternative to payday loans for underserved populations in the Charlottesville, Virginia area. Seth graduated with a distinction from the University of Virginia with an MBA in public policy and leadership. Thank you, Seth, for being here also. Very good. Thank you, everyone. I will then turn it to Peter, who is going to give us an overview of the changes and where we are today with the second round of funding for the Paycheck Protection Program loan. Thank you, Peter. I don't think we can hear Peter, Juliana.
Sorry, I had the mic turned off while you're speaking before. Okay, so to identify, the SBA has been providing a layered approach to this, as you're all aware, with the economic injury disaster loan, the advance with that loan, the express bridge loan, the Paycheck Protection Program, the Small Business Debt Relief Program, and the existing SBA program. So on May 27th at 10:30 in the morning, after the reappropriation of funds, the Paycheck Protection Program reopened and started lending. And in the first 26 hours of that opening up, let me see, what did we have? We had, I want to say, over 450,000. Yeah, we had over 450,000 small businesses approved for over $50 billion. And the average size of that loan with the PPP is 110,000 for that at this time. So but a big thing was the economic injury disaster loan did not reopen. Okay, the SBA had closed that previously, and the additional funds which were appropriated were used to continue to take care of the existing loans which had been applied. The SBA has received those loans. This is directly with the SBA, the Economic Injury Disaster Loan, and they're processing them on a first come, first served basis and going through that. So that's important to know. So do not know if the Economic Injury Disaster Loan Program will reopen, but the Paycheck Protection Program is going very strong, and yeah, over 50 billion in the first 26 hours to 450,000 small businesses.
Oh, that's actually pretty. I'm happy to see that the PPP was funded, because it was actually a better, to me, had better features if you had payroll, of course. So that's really good. But I know there are some questions still around whether the EID alone is going to be funded again. Do you have any insights on that? That's been on the discussion?
No, not at this time. I have asked that myself. Thank you.
Great, thank you. So I know that and you may have touched on this, but there was a lot of talk about how some small businesses felt that they were left out in the first round, and a lot of criticism towards banks. So is the new round now taking this into account and addressing the issue of some businesses being underrepresented during the first round?
So with this reappropriation, what we're looking at is the smaller lenders. They've broken it down by lenders. So we're talking smaller lenders are local community banks or credit unions have had a cutout of funds, approximately $60 billion just for those small local lenders to expressly deal with and make sure there's funds for the local businesses in our communities. And then once those funds are exhausted, they're able to, pull from the larger funds, pool of funds. So there's been that set out, focusing on the lenders.
Great. That's actually a question that I had originally. I had been thinking about how funds are allocated among the banks and lenders, but you have answered that. During these rounds, are there any additional requirements for the applications? I know at some point I heard that applications that had been submitted before round 2 were going to have to be resubmitted. I see that that's not the case anymore. But anything else that has changed in terms of the process to apply?
Not in the process of applying, but what the SBA on the back end of it has applied a controlled flow approach to the lenders, also limiting how many applications can be submitted by each lender of the over 5,000 lenders that are submitting applications. So what I mean about this is the number of applications submitted by a lender on an hourly or daily basis, not allowing the use of automated submission systems used by some of the larger financial institutions, so they could just throw in so many applications at a time. So they're pulling that back. And also in the application process and requirements, we're identifying businesses are having to make certain certifications, attestments, okay, to their need and use of the money, and that they're pulling back employees. And so in the first round, we had a lot of talk of larger institutions receiving the money that didn't need it, that they had additional access to financial resources through other methods. So what's happened here is basically they've been told is that if you do not actually have a need, you do not have that you have access to other financial resources, you need to pay it back by May 7th. So the loan, when you receive the loan, it should be paid back by May 7th. So those are, in the application basis, there's actually no changes, but they're trying to break it down, make sure it gets to the local communities, to the small business owners, trying to make sure that the larger groups and institutions aren't receiving the money. I know in the first round, there was something like some of the large academic institutions received money or talk about that. And I know several of them said, we did not apply. It was just on automatic because of our research and stuff we're doing. So we will, if the money does arrive to us, we will return it. We did not apply for this. We are not looking for this, and they will return it. So we're seeing a lot of good things. And as I mentioned a moment ago, right now, the average Paycheck Protection Program loan size is $110,000, which it tells us is getting to the smaller businesses.
Very good. Yeah, no, that's great news. Good to hear. Do we have any updates or information in terms of the timelines of when the applicants will receive feedback on their application or receive the funds?
No, we haven't received any new guidelines on this. We're still, based on about, roughly 3 weeks. It's been 2 to 3 weeks is what they've told us from the start. People, as they're waiting, additional documentation information is needed. So please, have your information, your financials ready.
And has the deadline for application changed? I believe the original deadline was June 2020. Is that still the same?
So as funds permit and reallocation of funds permit, so they're going to keep running this. So we know, like, the economic injury disaster loans runs through December 31st, but right now it's not taking any additional applications. So for additional funding and support, you'll need to reach out to your congressional representatives.
Great. And actually, you mentioned something before that made me think of a follow-up question, and I want to hear what you think about this. So originally, business owners were told not to apply to multiple banks. And now we have learned that some banks ran out of either funds or they weren't taking more applications. And in theory, a business owner could have gone to another bank. Are there any restrictions around that currently?
My understanding on that is that you can apply, send an application through multiple banks, but the second you are told you're being funded by a bank, you need to tell all the other banks to cancel your applications immediately, along those lines. So that's really the guidelines on that we've heard.
Okay, thank you, Peter. I'm going to move over to Michael, but if you want to chime in as we have a conversation with Michael, please go ahead. We'd love to hear any information that you have on any of the questions or items that we discussed here. Okay.
Thank you. I just wanted to jump in on that last point there, Ramona, if it's okay.
Yeah. Sure.
What we've seen at Fundera is that we've been advising clients to apply to multiple places in order to maximize their chances of getting funding. Along the lines of what Peter mentioned there, it is critical that once a lender provides that elusive PLP number through the E-Tran system, which effectively locks in their spot in line for a particular loan amount, that they do contact those other lenders where they have applied to withdraw their application. That said, when other lenders go to actually submit that application to the SBA's E-Tran system, if a PLP number has already been pulled and therefore some of the money has already been reserved for that applicant, then that other lender should be getting a decline notice within E-Tran. We have heard of a few cases of that not actually happening, in which case some small business owners have actually been getting 2 PLP numbers. And so the critical thing for small business owners is that, per the statute in the CARES Act, you can only, and the guidelines issued in the interim final rules by the SBA, is that small business owners only accept 1 PPP application per entity. So if you have, for whatever reason, received approval from 2 different SBA lenders, you should only accept 1 of those loans. Otherwise, you'll be in breach of the rules and guidelines outlined for the Paycheck Protection Program.
Thank you, Seth. Thank you for sharing that. That's very important. I have to admit, though, I haven't seen in the bank with the bank that I applied, I haven't seen an option to withdraw. So I'm hoping that that's there somewhere and that we can easily cancel if we need to, because it's really hard to get a hold of them otherwise, right? It's either it makes it all online.
Yeah.
Great. So Michael, welcome back. Michael and I are in the same industries. We're both CPAs, and we're going through the same processes and same pains and the same joy of helping our clients. It has been very, very interesting, and I have to say it is fulfilling. I have to say that it's good to feel that you're helping your clients through this crisis. So, Michael, how are you advising your clients who were in the queue for loans during the first round and they didn't get through? How are you advising them? And if they haven't heard back from the banks that they applied to, what are you telling them to move forward with?
Sure. Thank you, Ramon. I appreciate it. The first thing I advise them to do is to reach out to their loan officer to try to get a status update as far as where their application is in the queue. Is it an approved status? Are they awaiting additional information? You know, kind of try to figure out where it is in the queue. A lot of times it's hard to get a hold of a particular person depending upon the size of the bank that you are applying through. So if I can kind of, you know, paint the landscape a little bit, that Sunday before the funds were released on the following Monday, there was further rules published on the Treasury website that said for institutions which had at a minimum of 15,000 approved applications, they were going to be allowed to process a one-time batch of applications through the SBA system in order to assign E-Tran numbers and get those loans funded. So hopefully, if you were in the queue of one of those larger institutions, you were then part of that initial batch that they submitted for funding. If you're on the other side of the table and you were applying to a smaller institution, it was a little bit more of a manual process where they were kind of applying or submitting for tickets on a application by application basis. But the advantage with being with a smaller institution is that you have those set asides that Peter was talking about. There were certain funds set aside for the smaller institutions. And as recently as yesterday, there was actually some time set aside for these smaller institutions to actually jump on to the SBA's portal and pull tickets without having to compete with some of the larger institutions. So there's a bit of a diversification as far as what the current playing field looks like, as far as you being potentially in a batch with a large bank or having a better, let's say, opportunity with a smaller institution, being that there are certain set asides. So as the panel kind of already talked about, potentially submitting more than one application isn't necessarily a bad thing. The only thing that potentially concerns me is if your TIN is being submitted from multiple institutions, I would just hope that it doesn't raise a red flag as a potential fraud risk or something of that nature.
Yes, in that case, we probably would recommend that they are very proactive and try to reach out to someone, right? Even the SBA. Anybody. Anybody to say, I don't want this, I have got too much. I actually have a question from the audience, which I think might be good for you, Michael. Sure. Someone is asking if they apply for both loans, the PPP and the EIDL, and they get approved for both. You know, I know there was an option to refinance the EIDL into the PPP. So if they didn't do that and they get funds for both, can they give back the EIDL and just keep the PPP?
Yeah, I mean, sure. The initial strategy that I kind of, you know, started with, you know, way back when these programs are first introduced, I said, jump on a computer, apply for the EIDL loan, at a minimum, get the EIDL advance. It's the quickest way of getting cash at that point in time. Have that application in process. As the EIDL application is in process, jump over to your bank, fill out the PPP application, and get that ball rolling. So theoretically, you kind of have two applications in process simultaneously thus giving you the option of accepting either both, one or the other, but it at least kind of opens up the most doors. So the idle loan has a more broad usage than the PPP loan in the sense that it's not limited to payroll, rent, utilities, and interest on indebtedness. You can use that to pay your vendors and your supply chains and things of that nature. So to answer your question, you can always pay back either one of the loans if you don't choose to accept one or the other. Keeping in mind the PPP loan theoretically will eventually be converted to a grant if you spend it on eligible costs, where the idle loan is going to be repaid, albeit it's a 3.75% interest rate for a for-profit and a 2.75% interest rate for a nonprofit over a long period of time. So it's not expensive money, but it's available to you if you need the additional cash to get through this economic uncertainty that we're kind of presented with at the current time.
I just want to jump in there for a second.
Yes.
Just want to mention that you can have both loans, but you cannot use them for the same purpose. So the paycheck protection, you're covering their payroll, your rent, your utilities, and if you had both loans, you would then have to use the idle for only other operational expenses, leases, fuel, whatever, transportation, whatever might be necessary for running your business, but you cannot have them used for the same purposes.
And Peter, correct
Thank you,
me.
Peter.
Oh, sorry, I was just going to jump in there.
Oh, yes, go ahead.
Based on the interim final rule, our read is that if the EIDL loan was obtained between January 31st and April 3rd, that's the date range that matters. And if you use it for payroll, then it must be refied into the Paycheck Protection Program. Do you have any additional color on that?
No, you're right on target with that, but that's the initial when it first started and first funding and things before the PPP even got going. And so they're identifying you can't have two loans for the same purpose. You can't have a EIDL and a PPP for the same purpose. So you would have to refinance EIDL into a PPP.
I got one other interesting possible scenario. Let's say you get, the idle and the PPP. You spend your PPP in the first 8 weeks, so you have exhausted your funding on the PPP. You apply for, a conversion from a loan to a grant. At that point in time, can you use your idle money to help fund your payroll?
That is a good question, and hopefully they'll provide guidelines on that going forward.
It is a very good question, because if your average payroll in 2019 was for 2 employees and now you have 10, you are going to run out of that, that money quickly, right? Because the loan is based on 2019 payroll. So yes, I was thinking about the same thing, Michael. Michael, I know that we had some guidelines around the package that each applicant needed to put together to apply for the PPP. I know the payroll reports, form 940, 941, and so on. But it seems like every now and then there was a request for something different. Maybe a different, if companies are using a PEO, they don't have 940s or they don't have this. So do you have any guidelines on which package should each entity type put together to apply? You don't have to get into all the details, but at a high level, what would an S Corp and C Corp versus the independent contractor versus the partnerships? You saw what the poll said in terms of the audience that we have, so I think that might be helpful.
The most concise answer to that question is whatever your loan officer tells you. They're the ones that are putting together the file, and they're the ones that have to get comfortable that the information you're putting on the application is properly supported so that they feel comfortable submitting it to the SBA for funding. So the long and short of it really is going to be up to the loan officer, and that's going to vary, just like the applications vary slightly by financial institution. But that's really the answer is whatever your loan officer is requesting, that's what you should be providing.
And in a lot of cases, these applications are being provided or completed online, right? And in some cases it doesn't say, this is the specific document that you need. Just provide your payroll reports. Or so it gets confusing at times, especially for the independent contractors or partnership owners. There has been a little bit of back and forth. I have noticed that with my clients. So it's easier to identify, for those applicants that are one-off to deal with their own situation. But when the massive group is applying and they're just providing one form and then they get responses with follow-ups, it seems like it's affecting a lot of people when the banks are not using a consistent requirement package. So anything that you want to add to that?
Yeah, I mean, every business is different. So it's hard for a bank to ask for a consistent document because that document may not exist in all cases. So, I mean, you look at people, you have various numbers of employees, you have different ways in which those employees are paid. You have flexibility with the time frame in which you're, using your payroll. Like, I think that most people are doing 2019, but, technically when the CARES Act was first issued, it was the 12 months of activity immediately preceding the month in which you are submitting your application. So theoretically, if part of your payroll in 2020 is being used, you may not have certain forms that could have been available if you're using 19. So it's almost impossible to kind of come up with the same requirements for every situation. That's why there has to be some degree of flexibility, and that's where it becomes important for the business owner to make the loan officer comfortable that they're properly supporting the information that's being submitted. Makes sense.
And what about independent contractors, those that don't have payroll? And so from the perspective of a company that uses independent contractors, advice that they can give their independent contractors if they are asked. And if someone goes to you as an independent contractor and asks you for feedback on how they can get in the queue for these applications, what advice do you give them?
So independent contractors are actually able to submit for a PPP loan if certain criteria are met, like if they show a profit on their 2019 Schedule C on their 1040. So if you're an independent contractor, you can submit for a PPP loan. With that being said, entities that use independent contractors can't therefore count them as part of their payroll when they're submitting for their own PPP application. So that was part of the confusion or the disconnect that existed when these things first started. So as a business submitting for a loan, you wouldn't count your independent contractors as part of your payroll costs. As an independent contractor yourself, to the extent you have a Schedule C on your 1040, you have to use your net income that's being shown on that 2019 Schedule C, and that's effectively what you would use to calculate your potential PPP loan amount. So that's kind of that's the relationship between the independent contractors and entities that use independent contractors.
The other nuance on that piece is that a lot of folks obviously haven't filed taxes this year because the government has pushed out the filing deadline. And so a lot of folks in that boat who would rely on a Schedule C, like self-employed, independent contractors, sole props, haven't yet filed. And luckily the guidance has been that you can fill out a Schedule C and use that in your application, even if you haven't yet filed that with the IRS. So if you're an independent contractor or self-employed or sole proprietor and you fit in that boat, you can still apply using a 2019 Schedule C, even if you haven't yet filed it with the IRS.
That's very good information, Seth. Thank you for sharing. Great. So thank you, Michael. Again, as I'm going to move on to Seth, but if you have anything to share as we're having a conversation, please feel free to chime in, and the same with Peter. So Seth, I want to give you the opportunity to tell us quickly how Fundera is helping small business owners apply for these loans.
Yeah, no, first of all, thank you for the opportunity to join this great group of panelists. Fundera is an online marketplace for small business financial solutions. So what that means is that we act as effectively an aggregator or a marketplace for financial solutions out there, whether it be lending products, bank account products, payroll, credit, etc. And so Fundera is focused really on connecting small business owners with the financial solutions they need. One of the products that we have been supporting for the last couple of years now is the SBA's 7A product. So we've been building up our SBA platform. And then obviously with the COVID-19 pandemic, we've 100% pivoted our organization to focus on the Paycheck Protection Program. And so we've rebuilt our entire application. You can go check it out at fundera.com/PPP. And you can fill out one simple application. We've got 8 PPP lenders that we're working with directly, both bank lenders as well as non-bank fintechs who are approved by the SBA to offer Paycheck Protection Program loans. And we've got a team of small business financial advisors that are supporting small business owners in terms of getting their application prepared and submitted to the banks. So we're really honored to be a part of this solution right now in terms of getting capital to small business owners who need it. And to date, we've received tens of thousands of applications and have been successfully submitting those to the various lenders on our platform to help them secure their portion of the Paycheck Protection Program.
Yes, I actually went on the platform. I wanted to see what it was like, and it was very user-friendly. I like that you give instructions on how to calculate this and calculate that. It was really, I was impressed. So not promoting it, but just giving you my feedback.
We appreciate that.
Go ahead.
I just said we appreciate that. We're glad that you found it user-friendly. That is our goal.
Yes, very good. So what is the process to match applicants with a lender? This is happening in the background, or is it something that you're going to send applicants, a question, pick between these 3? How does that work?
Yeah, that's a great question. So to add on to what Michael was saying earlier, right? Some of the requirements can vary by bank, and that can just be based on the bank's or the lender's own risk tolerance. So in some cases, for example, some lenders, they just don't have the capacity to be supporting businesses that are owned by non-US citizens, just because of the documentation requirements that the SBA requires. So if that's the case of a particular applicant, I apologize for the sirens here. But if that's the case for a particular applicant, then we might route that applicant to another lender who's working with small businesses who are owned by non-US citizens. In similar fashion, some lenders are not working with franchises just because they're not set up at this point to be able to do that and ingest the SBA's franchise codes. And so there's a variety of factors that might go into where Fundera would submit a small business owner's application. But ultimately, we're trying to match you with a lender that makes the most sense based on your unique situation, as well as the documentation that you can provide.
Very good. Now, that makes sense. Thank you so much for going through that. How many applications? I'm not sure when you guys started. I didn't get to that, but I don't remember when you started accepting applications. Maybe you can tell us that. And then I'm curious to know how many applications are you receiving now?
Yeah, so we started, our application went live actually on April 1st. So a couple of days before the Paycheck Protection Program opened up, we wanted to start allowing applicants to submit, and so that we could start processing their applications, making sure that they were packaged according to our lenders' needs. And since that time, so it's been about a month, we've received about 50,000 applications, and we've submitted over 20,000 to lenders. Some folks hadn't completed their application or provided the necessary documentation needed to be able to submit. So we've been processing literally around the clock. Our entire company, even folks that aren't advisors, have been pitching in to process applications, learn the Paycheck Protection Program, and help small business owners get their applications submitted. So we've been really, really excited by the traction that we've been gaining in the market and just the impact that we've been able to have on the small business community.
So when you collect this information from the applications process, who are you? Is it Fundera that's reviewing the documentation, or is it the lender that you match them with? I'm assuming it's the lender, but it would be good to understand that a little bit.
Yeah, that's a great question. So the answer is both. So Fundera acts as effectively as an agent or a broker between the small business owner and the lender. And we have contracted with lenders as an agent to basically package up applications on their behalf. And so that we know the underlying needs that they have in terms of the document requirements, as well as the calculators that they are using to calculate the payroll amount. So what we have done is basically built that into our systems so that we know the exact requirements and can effectively pre-package the application for the lenders. So it lightens the burden on our lenders so that they can process more applications because we're submitting them cleaner files. And then our role in the process is we have a team of advisors that are working directly with small business owners to review their application once they've submitted it on Fundera.com.
Thank you, Seth. That makes sense. If an applicant was declined during the first round, and I believe you spoke about this a little bit earlier, and we touched on the fact that we are advising business owners to apply through multiple lenders. But if an applicant was declined during the first round, can then now apply through one of these approved lenders or fintech lender, or are they now prevented from applying again?
That's a really good question. So it depends on what you were declined for. So if you were declined because you're an ineligible business according to the SBA's standard operating procedure, the SOP, for example, you might be a business that is deemed to be in doing illegal activity according to the federal government. That would mean you're ineligible for this product, and that would be true in round 1 as well as round 2. In the case where you were declined, let's say you were a franchise and the lender just wasn't able to support franchises based on their systems in the first round, but you were able to find a lender who does support franchises in round 2, you're free to apply. What we recommend that you do is that you apply to basically as many institutions as possible, again, knowing that whichever lender secures you that PLP number through the SBA's E-Trans system is the one that will be the one doing the funding for you. So it can be difficult to know. There's a lot of rules and regulations around am I eligible, am I not. We recommend you just complete the application and let the lender tell you, because it can be challenging otherwise to figure out exactly whether or not you're eligible. The good news is that a lot of lenders and marketplaces like Fundera have tried to build into their applications, call outs that say, if you answer no, if you answer yes to this question, you're going to be ineligible. So for example, if you're a convicted felon, or any owner of the business is a convicted felon, then you're going to be ineligible. And that's true whether it was round 1 or round 2.
I've seen those questions, and I'm wondering, like, if you answer them wrong and you get to that point where it's like you don't qualify, do you have the opportunity to change your responses? If it's something that was an accident. Mike, I see you're laughing.
I love it. It's creative.
Yeah, I mean, you certainly don't want to be, found to have committed perjury or lying to the federal government. So, you're certifying when you complete your application that you're completing it to that it's true and accurate to the best of your knowledge. So, of course, if your application was filled out incorrectly and you're not a criminal and you said you were, then you can change that. But if you are in fact a criminal, then you're ineligible.
Thank you. So you mentioned that you are making the process easier for the lenders, and you have received 50,000 applications. 50,000? That's what you mentioned before?
Yes, yeah. Since we started about a month ago, yeah.
Does Fundera have the resources to handle the number of applications that they're getting? And if you get an inflow, now that we are doing this webinar. You might get a lot of new applicants, but do you guys have the resources to support a very large number of applications?
Yes, we do. So the great thing about Fundera, if I toot our own horn, is that we've got a network of lenders on our platform. And one of the earlier questions you asked was around how we determine routing. And we have a number of partners where if your application is very simple, what we'll actually do is we'll send you an email, we'll segment your application, and we'll send you an email with a number of different links to partners of ours where you can apply directly. These are fintech lenders like Bluevine or Cabbage, and you can apply directly with them. And that way, our limited capacity isn't, going to delay your application from getting processed. So what we want to do is basically for the simplest applications, we want those to be streamlined through automated processes, through digital applications. And when there are more complex applications that have, for example, more unique ownership structures, those are the ones where we want to make sure we're segmenting those to be handled by our Fundera reps, our small business advisors. And that way we can cover the full spectrum of complexity of small business owners, and that all of them can get served. Now, obviously, at the end of the day, there's limited funding, as Peter has mentioned. The first round, $349 billion was allocated, and in the second round, $310 billion has been allocated. So, and of course, there is limited human processing power, that can be deployed in order to process these applications. So, the unfortunate reality is that not every single small business owner who needs support through this program is going to get it this round. But the only way to try to get funding is to make sure that you apply and do it as soon as you can, so that Fundera or another entity in the space can help you secure funding. So again, we believe that we have the capacity to help as many small business owners as we can, and that we have a network of lenders that can support them. But it is contingent on small business owners being organized and submitting their applications as quickly as possible.
No, that makes sense. And will every applicant eventually make it to a lender, or is it possible that they'll stop at you and they cannot move forward?
So we're doing our absolute best to process every application that comes through Fundera. We have not processed 100% of them, but we've processed almost all of them, and more of them continue to come in. So we're working through our backlog, and we hope that we'll be able to get through every application and submit every application to a lender on our platform before funding runs out. I think Peter mentioned about $50 billion had been allocated in the first 24 hours. The latest numbers we've heard is that about $90 billion has been allocated out of this 310. So, that's a little under a third of the way there. So the funding is going quickly. We hope that we're going to be able to process all applications this round, but there's no guarantee. So we're hopeful, but again, no guarantees.
Thank you, Seth. That's very good information. I'm very intrigued by the model and how everything is working in the background. So a lot of these questions were things that I was curious about. So thank you for answering everything. Absolutely. Thanks. Mike, I have a question for you. And then once you answer, maybe Peter can jump in. There might be small businesses that have had to let go of their staff. They're applying for the loan, they're hoping to get the loan and rehire. But even when they get this PPP, they might feel like it's not enough to rehire or their staff. Do you have any recommendation for those business owners?
Yeah, I mean, it's a tricky scenario, and the spirit of the PPP loan obviously is to maintain your workforce. But obviously, there's strategy. There's ways to still adhere to the spirit of the loan, but also stretch the dollars potentially. There's limitations on how much you can reduce each person's compensation before you start jeopardizing eligibility. And there's also guidelines as far as how much you can reduce your workforce before really jeopardizing eligibility. So if you don't cut anybody's comp by more than 25% and you're not reducing your workforce by more than 25%, although you may convert less of your loan into a grant potentially because you're incurring less payroll dollars, you might be able to stretch out the period in which you're able to continue to pay your people. In other words, if you kind of look down the road and you look at the next 8 weeks and you don't feel that your business is necessarily going to be up and running in the next 8 weeks, well, maybe the free money isn't necessarily your first priority now. Maybe maximizing the use of your dollars is more of a priority. So I really think you have to kind of look at your particular situation and then make payroll decisions based on where you see your business during this 8-week period of eligible costs and looking past those 8 weeks and determining where the next steps might be from there.
Thank you. I think that will be very useful to some of the audience, the business owners that we have in the audience. In terms of the forgiveness, we heard of the 8-week period. Any chance that this will be extended, especially with the rehiring? I have seen that this is concern for small business owners, where if they're not able to rehire their staff quickly enough, the 8 weeks might run out too soon, right? Any thoughts on that, Peter and Michael?
Well,
Peter, go.
I tell you that I don't make the rules. I just try to maximize my client's opportunity to take advantage of whatever those rules are. So, you know, I kind of can't, you know, call the plays without having the playbook. So I really can't comment more on whether that period will be extended because it's not my call. It's not my decision.
Right. You know, the business just has to, you know, as soon as they receive funds, call their employees back, and they're supposed to be, what, 10 days later, more or less, starting to process a payroll or something inside the system with their employees. And so there's a lot of, in today's environment, a lot of things that are making this very difficult beyond, you know, so, you know, trying to figure out, but it's a great time for them to also work with the SBA resource partners, our SCORE, our small business development centers, our women business centers, and our veteran business outreach center to rethink and plan for their business plan and strategy and how to move forward in today's environment.
No, thank you, Peter. We can talk forever, and as you can see, I can talk forever. Let's take a couple of questions from the audience before we wrap up, and I'll wait for them to come through. Terrapinn, the team at Terrapinn is going to be sending an email tomorrow with the recording of the webinar. So everyone that's listening will register and didn't make it will receive the recording and go back to some of the information that we have shared here today. And I have a question. What would be the best alternative for the EIDL since funding has stopped for the time being? So anyone who is not a good candidate for the PPP, what other options do they have now? And this is a question, I think, Michael, I think you can answer this one.
Yeah, so I have a couple thoughts on the EIDL loan. I mean, like we said from the beginning, I feel like the initial strategy was to apply for both the EIDL and then while the EIDL application was being processed, also apply for the PPP. So I do think you're going to find instances where companies are going to turn down the EIDL loan in favor of the PPP and maybe not take out both loans if they don't feel that they need both of them. So I feel like there's going to be money that's going to be kicked back into the EIDL pool. And, you know, we're talking about now that they were trying to exhaust all the applications that were in the queue during the first $10 billion worth of funding. Well, we just doubled that and added another $10 billion of funding into the program. So I think at some point in time, you know, they'll open it up. It's just a matter of trying to flush out that queue and see how much of those dollars are really going to be earmarked. So I don't think that the EIDL is like a dead approach. I just think that those funds just aren't available right now. You know, if you don't get either, if you don't get the EIDL or the PPP, there are payroll tax credits that you can take on your 941s, where you're eligible for a maximum of $5,000 per person credit if your business suffered, you know, losses, and depending on the size of your business, whether you're over or under 100 employees, it determines how you can, you know, apply or take this credit. But there are other options in the CARES Act outside of the EIDL and the PPP.
Thank you, Michael. And you mentioned there are also other options with non-government related, right, in terms of financing that businesses can explore, of course, with the good planning and making sure that they can repay that.
For small businesses, I know our Small Biz Development Center at Pace University has been really putting together a good list of grants and other financial assistance provided through private organizations.
Yeah,
Fundera. Thank you for sharing that.
Fundera is also, we have a small business relief hub, which you can access on our site, fundera.com. And there are a number of different options there. We actually have lenders who are still underwriting 7A loans. The documentation requirements are a little bit more extensive, but it's the SBA's traditional flagship program. And so that can be an option. And those are 10-year notes. We also have a list of state-based resources. So depending on what state you're in, there are different programs, for example, here in New York, that the state has released, as well as the city of New York, to assist small business owners. So we definitely recommend checking out Fundera's Small Business Relief Hub, where you see more resources that are available for you.
Thank you, Seth. I'm going to take one more question, and I think this is a good one. So since business owners are giving until July 15th to rehire, how can they meet that 8-week requirement to use the funds if they don't have their staff until June 15th? Any feedback on that, Peter?
They're just upon funding, they're required to call back their employees. That's what this law has, and I know there's conflicting with other government entities. Confliction there, so got to work through it.
Got it. So in theory, if we have the funds, let's use it to rehire our people.
Yes.
Something like that. Okay. I think this one's a quick one. If someone wants to check the status on their EIDL loan, can they do that somewhere?
No, when we expanded the IDL system, we lost the March 30th, streamlined it, took it from a couple-hour process down to about 15 minutes to apply using outside, third-party vendors. We lost the ability to check the status of those loans.
Okay. Thank you. Thank you for all the information. You guys are so awesome. You are great answering all my questions. Michael, thank you for bearing with me there with the tough questions that I throw at you.
I'm used to it.
You're used to it, right? Seth, I really enjoyed all the information about Fundera, and like I said, I think it's a great platform. And Peter, SBA is working hard, I know, so I appreciate the time and the support through all this. And we will hopefully all end up in a good place, and we'll be sending the webinar recording. If anyone has questions, you can still send them somehow, some way, and if we can answer it, we will. Hopefully you can get the information online. There are a lot of resources. I know Michael's company has a lot of resources available, and you can follow him on LinkedIn, social media, and get that information. Fundera is going to have some great information on their website, so check them out. Thank you, everyone, for spending the last hour with us, and we'll be sharing more information in the future with you. And thank you to Terrapinn for putting this together.
Thanks, everyone, for joining.